traders, Greg here with a market update. Okay, so it has been a very busy week in markets. Look, one of the focus for markets this week certainly has been all the central bank meetings that we've had. So we've had the Bank of Canada, they cut rates by 25 basis points this week, taking their their cash rate down from 3.25% down to 3%. We also had the Federal Reserve, who actually paused on rates, which was obviously expected, but Powell's also thought that that the current rates are actually at appropriate level. They're in no rush to cut. Markets sort of thinking maybe the next cut that they get is going to be around June of this year, so mid-year, so not anytime soon. And last night, finally, we had the ECB, the European Central Bank. They cut rates. They cut rates by 25 basis points, so taking their deposit rate down from 3% down to 2.75%, which was expected. Now, Lagarde in the press conference last night actually was very positive about inflation reaching, that they're pretty much there on the 2% target, so that they will continue to cut rates. So we at the market now is pricing in pretty much a done deal that ECB will cut rates another 25 basis points in March. So another rate cut coming up by the ECB in the short term. Okay, so if we have a look at the Fed, which is at 4.25% Fed funds, and we look at ECB down to 2.75, and now going to cut again down towards 2.5%. So the interest rate differential between what's happening with the Fed funds and the ECB is obviously blowing out into the US's favour. So certainly that is going to weigh on the euro. So the euro at the moment has just been trading about the 104 level. Certainly, the rate differential we just talked about is going to weigh on it. So I wouldn't imagine that we're going to see any sort of meaningful bounces or rallies in the euro or sustained rallies. But if you do see any sort of retracement anywhere up towards 105, I'd suggest that probably would be a good entry level to short euro, for lower levels in coming months. So yes, euro shorts are certainly still in play. Okay, so besides the central bank meetings, we also did have some economic data out of the US last night. We had fourth quarter GDP data that came out. So market was expecting 2.6% for fourth quarter GDP. Actually came out lower than expected at 2.3%. Now market sort of did shrug this off. Yes, look, it is still positive, but this was fourth quarter GDP when obviously we still had the last Biden administration. Now we've obviously got Trump in office, and the market is expecting that the GDP in the US probably will rebound and will be still at solid levels. So we didn't see too much reaction on the back of that US GDP number. Now, just keeping with US data, there is some US data out tonight, which is important data, top tier data, and that is US PCE inflation data. This is the Fed's preferred inflation gauge. Now, the previous month that was at 2.8%. Now, this number for December, market's looking for that to stay stable. This is for core PCE. At 2.8%. So I'd imagine, look, if it comes out as expected, that's not really going to move markets or change the Fed outlook. Certainly, though, if we did see a lower number, so anything below 2.8%, that's going to definitely be viewed positive by the market. That potentially the Fed's making progress on inflation again. So maybe then the market will start rethinking about the Fed, cutting rates. Wait until June and might start pricing in something sooner. So let's see on that. But certainly, market will not want to see a number that comes out above 2.8% for that year-on-year PCE data. Because obviously then the Fed isn't making that progress on inflation. No doubt you would see bond yields higher and a much stronger US dollar. but that's probably the lower probability outcome on that. Okay, so if we have a look at markets, the market that is certainly standing out at the moment is gold. So gold has made a new record high overnight. The previous record high there was at 27.91, which was made in October last year. So it's taken a few months to make a new record high, but gold has certainly done that, and we've traded as high as 27.98. So almost at that psychological 2800 level. Look, there's always a few things that move markets. It's never just one thing that moves them, and for gold, obviously, that's the case. Look, I mean, as we've described, we have been getting central bank meetings where they have been cutting rates. So we are seeing a global easing cycle for central banks, and gold loves rate cuts. So certainly that's helping gold. Trump's tariff policies is something as well that has been helping gold. The uncertainty to do with that, and whether or not how inflationary that is as well. So that's been helping gold. But one of the other things that a lot of the gold analysts are looking at, that gold is potentially sending a warning to all markets, is that gold is higher on basically the debt problem. That globally debt is too high, but especially in the US, they've got record debt of $36 trillion. And that's looking to, if they're on course of the way that they're adding to that debt, that'll go up to around 40 trillion by the end of the year. And so, it's looking like it's not being managed properly, unsustainable. And so gold is rising on, debt worries. So certainly, if that is the case, the market really needs to maybe listen to what gold is telling us all. But look, obviously, new record highs, record close is bullish. So I would imagine at some stage in the short term, it could even be today, we actually break that psychological 2800 level and potentially close above there. Look, silver also has rallied with gold, and we've seen a decent rally. Silver's been up, a couple of percent overnight, and certainly that's looking good as well. So I would not be shorting silver or gold, and suggest being long silver as well, because silver still has got a long way to go, nowhere near its record highs of $50. So. But the levels to watch there is around about 32.5. If silver does break above those levels, technically it's going to start looking, very good as well. So yes, long silver is something that you may want to have a look at. Okay, so just before market close, we can't finish a market update without talking about Trump. And yes, it looks as if those tariffs for Mexico and Canada are going to be 25%. So we heard from Trump just before the market closed, and yes, they are going to come into effect on the 1st of February. So on the weekend. The only uncertainty we have at the moment is whether or not those tariffs will apply to oil exports from Canada, and that is probably the biggest export that Canada does to the US. Obviously, Trump knows that he's going to be hurting his own economy by tariff, or putting a tariff of 25% on those oil imports from Canada. So it looks as if probably they will be excluded. So look, the market certainly will view that as a positive. But nevertheless, look, when we do get these headlines from Trump, the market moves immediately. We saw that. So we did see equities sell off, quite quickly on the back of that. We did see also the market rush into long US dollar as well. And just finishing up on the tariffs is the fact that he also mentioned that, look, China will be getting tariffs, but his team still hasn't decided exactly what those tariffs are going to be. So yes, dollar China, dollar CNH did rally on the back of that as well. So look, with Trump, unfortunately, there's no timing of when these headlines are going to come out. You know, that's one of those things that now for the next 4 years traders are going to have to navigate, is this unexpected volatility. But anyway, look, I hope that you trade well for the end of the week, and good luck, and we will catch back in with you next week.